Today was another gnarly day for the apes. AMC dropping. This is what I was expecting. I've been forecasting a double top and looking for the confirmation of that pattern for about 2 trading weeks now. If you go back, I think it's to August 8th, I say, hey, it looks like AMC's topping. And sure enough, today we did pass that threshold to confirm that double top, so I am looking for some more downside. I think that the everything rally, this big relief rally in the middle of the bear market, is starting to retrace. And so it is possible that the price of AMC could continue to drop for still a little while longer. I'm not entirely sure what Ape is going to do when it comes out. I think more than anything, Adam Aron is doing his best for what's good for the company. And that is to make money. And if that's not going to come through revenue from people seeing movies and getting food, then it's going to have to come from selling equities. Back in 2021, I voted yes to share dilution because that's what the company needs, is cash. I think that now Adam Aron has gone to all the trouble to create a new equity to sell because his shareholders voted no, which I disagreed with. So I guess we won't know until it happens. I think it's going to effectively be a stock split and then share dilution. If that doesn't bode well into the squeeze narrative, that doesn't matter to me, and I don't think it matters to Adam Aron either. He's just trying to keep his company running. Long and short of it is, I think a lot of things, it doesn't really matter until we have some price action to talk about. So let's just open up the charts and get into the analysis. With a quick market overview, I think it's very important to see the context for this correction in AMC, because this big rally that brought the meme stocks all this upside action, which I forecasted, appears to be ending. It looks like we're going into a retracement. I'm just going to draw some lines really quickly. Well, first and foremost, I think it's important to acknowledge there's a bunch of gaps. All of these charts have them. SPY, IWM, QQQ. Right, so at some point those gaps are going to fill, everyone knows that. I think this push higher to 431, that marked the top of the rally, and now we're looking for retracement. It's very possible we've seen the first 2 waves of a new motive wave. The third wave of that motive wave would bring us all the way back down to this trend line, and this is a broadening pattern. It's corrective in nature. Which way the markets go from there, I don't know, but it looks like 414, 420 probably is going to be where we see that low come in, probably next week if I had to guess. IWM making a similar move, and I'm just going to draw that going down because that's what I think is going to happen. As VIX progresses down this channel, there has now been a level of support here at 20, and that's a big deal. VIX is probably going to rise and come up to this uptrend, in which case everything would start coming down as VIX rises. That makes a lot of sense, and that would not bode well for AMC. Let's go ahead and talk about this one, the double top. This is a big deal. Big deal. Top 1, top 2. The confirmation comes when the price closes below the low between those 2 tops. And today we had it. That is a nasty candle. Something else too is the 3-step trend reversal that also occurred in the last 2 days. So Bulkowski, he says to look for a 3-wave pattern when a trend line is breaking. This trend line is pretty strong, really, if you think about it. Look, it was that touch off of there, and this volume that sent the price all the way up to 27.50. So breaking through it now is a tremendous deal. It's a big deal. The first step in this reversal is to first come down and touch the level, close below it, and then the second step begins, which is a test of the breakout price or the trend itself. And we saw that right there. And now we've seen step 3, which is a close below the low from the breakout. Short and long of it is that, hey, this looks like it's going down. Double top confirmed. The target is 1639. I don't know how quickly we'll get down there. There may be just a little push higher before another dip. The price could also just gap and run. That would be even worse. Everything I've been saying about this bearish divergence in the RSI has been spot on. I don't know what to say. This is what I was looking for. There it is. So okay, moving on. This is my Elliott wave analysis. I'll run through it really quickly. A motive wave has 5 waves, and I think from that high at 27.50, we saw 1, 2, 3, 4, 5. And this motive wave made me think, hey, we're probably in a zigzag. In a zigzag, there's 2 motive waves, one at the beginning and one at the end after a corrective bounce, which is this middle part here. So what I'm seeing is that first leg play out. This corrective bounce was wasn't really a rising wedge. It really wasn't. But it did have that contracting price range, which is bearish, just naturally a bearish thing. And boom, the price broke down and started a new correction phase really early before setting a new low. What that means is that this wave heading down, this guy right here, this wave is probably going to be a third wave extension, which means it'll be strong and powerful, and who knows when it's going to end, but it'll feel awful if you're holding long into it. I've been trading puts, which has been good. Hey, look at this, Edward Smith, he commented first on yesterday's video. My longtime followers know if you want to be on the charts, all you can do is comment first. So it's something I used to do, and I still do it. So if you want me first, comment first, and boom, there you will be on my charts. So okay, let's go back to that third wave extension thought really quickly. So this dump would be 1, I have that shown here. 2 would be the second wave, and then 3, 4, and 5. This big push down to 1765, I think, will just be wave 3. Then we'll find a corrective wave 4, which will be a bounce. Let me just clean that up too. And that bounce might be a 3-wave pattern. And it should ideally test the low from this wave back here, right? So that'd be probably coming back up to that $21 level. That'd be wave 4, and then guess what? We have one more wave down. One more wave down, and it's probably going to match both time and amplitude of wave 1, which was from $27.50 to about $21. So another $6.50 drop after 21 brings us down towards 15. I can really see the price moving down that way. This Elliott wave count supports that. It has been the best count I've seen so far, and that's why I'm sharing it. It's pretty solid stuff. Moving into the 1 minute time frame, I did call this a contracting consolidation pattern today for that 4-wave bounce. There's just too much space in here though. Pennants don't form with that much space. I didn't know what else to do though with it, because it really does look like we had a corrective bounce 1, 2, and 3, and then this looks like a motive wave, doesn't it? So it doesn't quite fit, but we did have a downward breakout from that supposed pennant, and I think more than anything else what we're just seeing is the beginning of that push down. So going into tomorrow and early next week, I'm bearish. The analysis is bearish, and again, I don't know what Ape's gonna do. I don't. Probably just a stock split, and then probably just share dilution. Probably the simplest answer is the best answer, and it's important to know or to acknowledge that the point isn't to try to find a reason that fits your agenda. It's just to find what's true. And what's true is that the analysis has been bearish. It just has been. Good analysis has pointed to the high being at $27.50, and now a company that is struggling to make money needs to raise some money, so it does that through share dilution. If AMC shareholders would spend as much money as they're spending on stock in the theater, then AMC would have revenue, would be generating money, and then the shorts would be in trouble because the company would be healthy. But the stock price of AMC does not help AMC. At least not if they can't sell shares. So when voter base in 2021 voted no, that was incredibly detrimental to any squeeze that could have happened. If they had voted yes in 2021, then the June rally would have been even more spectacular and probably would have actually been a short squeeze. That's what I think. It's not much, I guess, but I sold my shares at 26.10, and I've been playing puts since then. If the price does make a big reversal, I can hop back in at any time. Sometimes I buy deep out of the money calls. I call it MOAS insurance. I don't do that much anymore because it's just throwing away your money, right? That's what I've been doing. I used to. I don't do it much anymore. So that's all I have for today. Happy trading.